evening. Good to have you with us in the 9 p.m. edition of the Urban Debate. Tonight, we put the spotlight once again on the economy. India's GDP numbers for 2020-21 came out last evening. And here is what we've seen take place in 2020. The year of the pandemic, the year of the first wave and the first lockdown. Where because of that lockdown, for the period of April to June, we saw the economy contract, the GDP contract 24.3%. And then from there, it began to improve to the point where for January to March period, we registered a growth of 1.6%. Overall for the year, the GDP contracted 7.3%, a first in many, many decades. As unprecedented as last year was, so was the performance of the economy. Now, I just want to point out one thing, that all of our economy woes aren't just because of the pandemic. That in fact, India's economic problems began much before the pandemic, the coronavirus hit us. And here is the chart that tells you that of how in 2016-2017 we were growing at 8.3%, and then 7%, 6.1%, 4%, and then of course came the big disaster. So tonight, while many people are actually focusing on the 1.6% growth in the January to March quarter, others are focusing on the 7.3% of contraction. I want to take it to the next step and say, well, there's also a second wave that's hit us since these numbers actually came in, or what these numbers actually capture, which is the earlier period. And after that, effectively, largely, we've been in one or the other kind of strict restrictions or lockdown in large parts of the country. At least the big states that are the economic powerhouses for our country have been in some or the other kind of lockdown now for several weeks, which is now beginning to impact us again. And here is the latest CMI data that we picked up for you, and we're going to talk about this now. 1 crore jobs, 10 million jobs have been lost because of the second wave, so essentially in the month of April and May largely. The other interesting insight that we got from here is the impact on the rural side. And remember, we've been telling you this, that rural India has been impacted this time because of the pandemic, and that will also have an impact on our economy. Rural was relatively strong last year around. Another worrying trend that has emerged, of course, apart from just job losses, is overall household incomes going down significantly. So the pain is not just for those who've lost their jobs, but also in general, people who've seen cuts in their salaries or losses in their businesses. Let's take this conversation forward tonight with our first guest who's joining us right now, Mahesh Vyas, Managing Director and CEO of the Center for Monitoring Indian Economy. Good evening, Mr. Vyas. Always good to have you with us. I want to ask you first, how do you view the data that's come out from yesterday? Many are talking about the contraction of 7.3% for the year. Some are focusing more on the January to March 1.6% growth data, and then thereby analyzing the state of economy.
So let me take you to the current period, which is April and May. You did reel out some numbers which were available till yesterday. Today morning, we released some additional data. We are on 1st June, and the data for May is now available. We were, during the course of May, making estimations that the month could end with a loss of 10 million jobs. Mind you, the loss of jobs in April was 7.35 million. So we already recorded a loss of 7.35 million, and we were expecting another 10 million jobs to be lost in the month of May. This morning, when the numbers came out, the loss turned out to be a lot higher than the 10 million that we were expecting. It's actually 15.3. So we had 7.35, then we have 15.3. Basically, we have lost 22.7 million jobs in April and May. This is really very high. We don't lose 15 million jobs easily in a month. This is clearly the impact of the lockdown, excepting for April 20, when we lost many more jobs. This is the highest loss of job that we have seen anytime in the history of our recording employment since 2014. So this is high, this is severe, and the unemployment rate is up to 12% now, 11.9% to be precise.
And if I could ask you, the final details of these numbers that you've looked at, where has the massive loss come from, and to what extent are we now beginning to see job losses and pain in rural India?
So very much like it was in the case of April 20, May 20, when there is a lockdown, when the city shuts down, and whether it is as strict as last year or even selectively as it is this year, the people who suffer the most and the people who suffer immediately are the daily wage earners. So hawkers, daily wage laborers are the people who get hurt the most. And this is what happened this time as well. The biggest hit was on the daily wage laborers. This time we also saw a small hit on the small businessmen, people who ran small enterprises, took a hit as well. There was a release of labor from agriculture in April, but they went back in May because the pre-sowing season has begun. Preparation for the Kharif crop has begun, so 9 million jobs have been found over there, but we have got a big 25 million job loss in non-farm sectors in April and May. So I think daily wage laborers, and there has been a steady fall in salary jobs that's secular, independent of the lockdown anyway.
So let me ask you this now in the larger perspective. Things may not get as bad as the last April to September period. Maybe there are a lot of people who are hoping maybe this time we reopen faster in some sense. But what do you think will be the impact of a second consecutive year of pain? A second consecutive year with intermittent lockdowns and COVID cases spiking and businesses shutting down and more jobs being lost. Collectively, what does that do to our economy then?
So two things that we can highlight from our surveys. The first thing is that the recovery has stalled. Okay, the recovery stalled by December, January. And after that, the recovery has been kind of going back into a fall. So employment, which was of the order of 404 million in 2019-20, before the pandemic hit us, is down to 375 million. The peak it reached was 400 million. So we never got back to 405 million, 404 million. We never reached there. And in January, we were at 400 million. We are now down to 375 million. So we recovered, but we exhausted ourselves before the recovery was complete and then have been sliding down. So I think this is the first difficult thing I see, that the recovery is not complete and we are sliding down again. Even if you recover from 375, going back to 404, 405 is really a long haul. It will take several months and some good luck for us to go back to 404, 405, and we require to go beyond that as well. But besides the employment problem, we also have an income problem. People get their jobs back, but not their salaries as they were before. So the recovery is really a long haul. We require to put all efforts into rekindle demand. That can only be the way in which investments and jobs will come back. So this is not easy.
So do you foresee now recovery to be much slower than what we would have otherwise seen?
Sorry, Tanvi, I couldn't hear you initially. Can you please repeat?
Do you foresee our recovery to be much slower than what we would have thought, say, a few weeks ago about where we were headed?
Oh, yes. The recovery is receding every day. And I'm not dramatizing by saying every day. We have seen in the last 1 month, almost every day or other day, there is some agency which is scaling down its expectation of the recovery. We began by close to 12%. This year, we are down to close to 8%. That's a huge fall. 4 percentage points in the recovery after a very bad year is a very bad piece of news. And it is quite likely it will get worse.
So, Mr. Vyas, let me ask you this as my final question then. Do you think by now we should have seen a larger government intervention? May last year, there was some kind of a stimulus package, at least that was announced by the central government. This time, since most lockdowns have been individual state-level lockdowns, nothing has come through. Now, how is that going to further impact us?
Well, it's really high time the government comes out and gives a relief package and has a clear plan of how we're going to come out of the current morass that we are in. It's really a bad situation. It requires the government to step in because the companies, the enterprises cannot step in. Their capacity utilization is down to 66%, and there is no demand, so therefore they're not going to invest. Households are either indebted or impoverished. The only way out is for the government to step in, increase its deficit, increase its spending, and hope we come out of this through that spending.
I completely agree with you. I think the household savings are already diminishing. Their incomes, like your own survey and data suggests, have dropped, for a large percentage of the households. Businesses have somehow stretched through the last 1 year, borrowed, cut down on whatever cost they could, and I don't think there is too much of overhead room there. And so all hopes really being pinned on the government here. Thank you, Mahesh Vyas. A pleasure as always to have you on the show with your insights on the state of economy. Let's also say good evening to the panelists who are now joining us. Anil Sasi, National Business Editor for the Indian Express with us this evening. Professor Santosh Mehrotra, Senior Economist, always good to have him. Professor Aman Agarwal, Director and Professor for Indian Institute of Finance. It's been a while since Mr. Agarwal came on our show. And Sandeep Ghosh, Political Analyst. And of course, somebody with large amount of experience in the corporate sector joining us this evening as well. So good to have all of you with us this evening. Professor Mehrotra, let's begin with you. There are two ways that the people are trying to interpret and explain the growth numbers to us. Some prefer to talk about January to March. The others prefer to talk about the overall country number. Would you be in the third category that talks about the second wave and what it's already done to us that the GDP data doesn't even capture yet?
I think you're absolutely right. What this has told us is simply something that we mostly knew. So there's not that much that is new. And I'm so glad that you actually began your program by talking about the systematic decline in the growth rate that had taken place from 16-17 onwards. And I should just remind our viewers that 16-17 GDP growth rate, supposedly 8.2%, is actually quite fraudulent for the simple reason that it was the year of the demonetization, and we know what the impact of the demonetization was on the unorganized sector it was devastating. So be that as it may, it never was 8.2%. And on top of all this, we already were at a 45-year high for unemployment. Just to put the picture in perspective, in 2019, 45-year high. In other words, aggregate demand was collapsing every which way. On top of that, you've just heard Mahesh Vyas tell you about a situation which is, again, unprecedented for in 1 year. And we're only in the middle of the second wave. The second wave has not gone away. Let's not pretend that just because it's declined in Mumbai and Delhi and Mumbai are not India. And the aggregate demand is collapsing. Mahesh is absolutely right. The government needs to come in with a fiscal stimulus. It came in with a fiscal stimulus of 2.2% of GDP in FY21, which is 40% of the average pumped into the economy by emerging market economies. We regard ourselves as one of the sort of fastest growing large economies of the world till 2019. So where is this fast economy? How come it is not recovering? It is not recovering because of poor management of the pandemic and poor management of the economy. Because if we had had a fiscal stimulus, which is at least as large as the emerging market economies, then we might have possibly seen a revival of the growth on a sustained basis. What is happening is that there was a rebound And the chief economic advisor started telling us already last year that this is a recovery, when we all kept saying this is merely a rebound in an unlocking economy. And now look what is happening. And please remember that the one silver lining last year was the agriculture sector. Why? We got a good monsoon. Well, we're going to get a good monsoon this year as well. But the rural areas were unaffected by the first wave. This wave is devastating the rural areas. What does that mean? It's going to reduce aggregate demand further because it's increasing expenditure on health, because their health system is completely broke in the rural areas in any case, and people are falling sick. They are not turning up for work. Cultivators, landless labor, all of them can't turn up for work. It will disrupt supply, and what will happen is that there will be food shortages and an increase in inflation, in food inflation further down the road.
Yes. And let me add one more aspect to this. You're extremely right, and we are going to, in more detail talk about the pain in rural India. The biggest hope that everybody seemed to have, Anil Sasi, even now when I speak to many from the corporate sector, is that we would have managed to vaccinate more people, or that vaccination is our only answer, and we're now going to get more vaccines in June or July, and so by the year end things are going to be all back to normal. There's a big question mark on that as well. So when FICCI tells us that the business confidence index has plunged to 51% in May, is that a correct reflection, or do you think the sentiment is actually worse than even that?
Of course, it's actually worse than that. Let's just remember that...
Professor Mehrotra, if you will allow me, I'll just take that question across to Anil Sasi. Yes.
No, the important thing is that sentiment is slipping. And, the GDP numbers... FY21 and the fourth quarter numbers were clearly as per script. It goes off script from there on, from April onwards. And perhaps the biggest question mark that you have in terms of confidence is the fact that we've not been able to procure vaccines. And there is certainly a big question mark over our vaccination schedule, the next quarter or the quarter after that. And the business confidence reflects that in part, primarily because unless you vaccinate, and in an economy where services dominate, especially contact services, unless you vaccinate early, quickly, the working age population after you've sort of covered the priority groups, you cannot get them to work. And if they're not coming back to work, these sentiment is only going to slip as we go forward. And as Professor Mehrotra said, the problem is that we've entered this pandemic with 8 successive quarters of declining growth. So the firm footing that a lot of the other countries had when they entered the pandemic, quite clearly we don't have that. And there is no indication as of now of whether there will be policy support or not. The first wave, much of the heavy lifting was done by the RBI. You have to remember, the policy support was very, very meager. It was about 2.5% or somewhere around that. We've got nothing as of now. No announcements. So that only aggravates the uncertainty that we have and that businesses are facing. So quite clearly, the FICCI confidence survey does point to a dip and a continuing slide, and that to my mind is a worry.
Yes, in such a setup, Sandeep Ghosh, can we really expect the companies, the private sector to really pull their weight? And a lot of conversations that I've had, with government representatives, the chief economic advisor, even Niti Aayog, they've always indicated that, government can't do all of it. The private sector needs to do its bit as well. They need to invest as well. But when your capacity utilization is 60% or lesser, then no company is going to be putting in more money to expand it.
Precisely. You see, unless the situation normalizes, there is no point in ramping up capacity or supply side. Because if there is no demand on the other end, you don't do that, and you rather wait for things to stabilize. But I have a crib against the corporate sector, which I have written an article earlier this week or end of last week, is you see, all of us, every sector thought, life is going to be back to normal and business as usual as soon as the first wave receded. But both experience as well as projection says that once you have a pandemic, this wave of uncertainty in one form or the other is going to continue for a long time. So this was the time for people to reset and reboot. And even now, private sector will have to do that going forward. Otherwise, you are just going to have these setbacks time and again. And if you don't build that resilience, if you don't change your way of working, move towards, look at greater, plan for better disruptions, you're going to have these sort of huge setback. So even if you see the performance of last year, or for that matter, last quarter, you'll find it's very uneven. Certain sectors have done well. Your manufacturing has done well. Construction has picked up. But where you have got hit is the service sector and all the services, broadcast, the whole hospitality and the whole range of it. Now, going forward, you would probably see we need to go through a readjustment. Some sectors will do well. If you see the results posted by corporates for last fiscal, some companies have reported supernormal profits. Your FMCG goods, you see the building material sector, they have posted great profits, whereas which we don't see below the radar or below the line are these service sectors where you have had huge displacement of employment, businesses have shut down, and that is where the pain point is. And that is what we'll have to look at, both the short term as well as the long term. So short term, you will have to come in with a lot of mitigating measures, palliative measures, and those have to be in form of pure aid. Like, already I disagree with some of the economists earlier to say that, this was not the time as yet to inject money to rev up the economy. Right now, you need to save lives, get your vaccination things going, and make sure people don't starve. They get the food. And so therefore, the first step, which they have done in the Pradhan Mantri Garib Kalyan Yojana, etc., to keep the food chain going. It is only after you stabilize, then the first stage would be to rev up the demand. And then finally is how do we ensure a little bit, you'll have bumps, you'll have ups and downs, but how do we smoothen the journey forward? And that's where, as you were mentioning, Tanvi, very crucial is your vaccination drive.
Yeah.
And in vaccination drive, we are in right now, in a very unsatisfactory situation. There is a huge gap in supply and demand. But hopefully things should pick up by June, July, as they're saying, they're looking at doing even a crore jabs from July. If we get onto that level, maybe things will stabilize. But then again, we should be prepared for the unexpected. You don't know what the third wave will come and what variants it will come, whether people would need to be revaccinated again. These are all huge, unknowns which we'll all have to cope with.
Yeah, and I want to say absolutely, and I want to highlight that I think while there's so much of noise around, the stock markets and investors who want to create some positive environment by repeatedly saying, oh, by the end of this year, people are going to be all vaccinated and we can get back to normal. I think internally, most businesses are playing it extremely cautious. That was the response we even saw Aman Agarwal when, the rebound happened after unlocking last year, that everybody said that, no, let's just wait. This could just be a rebound and it may not necessarily be a recovery. Even now, they're waiting and watching. Now, they've seen 2 rounds of lockdowns, of 2 rounds of COVID waves. There may be a third one. Everybody is talking about it. And so business plans may not change too much. Do you agree then when the chief economic advisor says the impact of the second wave won't be that big?
No, I think it is a question of not the size only, but the way it will be absorbed in the markets and by the people. That's one thing which is very critical when you talk of the impact of the second wave. There are a large number of figures which have been given by my predecessors, but there are certain interesting figures on the economic positive side as well. When we look at the foreign direct investment in the last 1 year itself is about 81.7 billion, which is about 6.8 billion per month, which is extraordinarily high as against previous years. then when we see the FII investment, also it's about 37.6 billion which has come into the country, which is the highest in the last almost 7-8 years. The foreign exchange reserves have touched a very high figure of almost about $600 billion. Plus, the inflation is fairly under control, which is a haywire for most countries around the world. When we look at the GDP, certainly the projections have come out to be lower, and the impact is there. And we are going to see the revisions which have taken place. There may be further revisions which may take place given the length of the current lockdown which is being observed. But despite that, the RBI's dividend declaration has been high. The kind of reserves they had the chance to buy more gold to expand the reserves. We have a sustainable reserves means that we have a sustenance of going about liquidating them at any stage to bring about the take care of the emergency which we have in this country. We are seeing, as the previous colleague told, the kind of rebound which is there in various sectors. There are certainly large number of companies and industries which are crippling. Many of them are dying. But then there are a large number of industries which have been crippling for decades, have started picking up, specifically the hospital, the pharma sector, and various others, which had actually been in a very bad shape for the last decade or so, have started picking up, and they are going to be still going strong. Now, you see, when we have studied at the Institute almost a span of about 3,000 years of various pandemics and epidemics, we have seen those kind of rebounding factors which have come in economic growth after a similar kind of a scenario happens, whether it is a war, whether it is a pandemic or an epidemic, because of the scarcity of human capital and resources which gets created and the way they have to be distributed among the balancing people which are there. So, there is, as you asked rightly, that where do we see it happening? It is expected to come. And fortunately, when compared to the rest of the world, the growths are far better than any other economy around the world, keeping inflation very much under control. Now, when it comes to what you said about the chief economic advisor, talking about the impact, yes, certainly most of us are much better prepared as against the previous year, despite the fact that we do not know what is expected to happen, because there are people still dying despite having taken the vaccination. And this is irrespective of which vaccination they take. Many of them have not survived even after second vaccination. So there is a scare within the minds of the people. And so for them, as of now, and this has been the case in history as well, that when we see such kind of scenarios, the first important component coming to one's strength is to sustain, to be able to sustain oneself, to have good health. And the growth and prosperity is something which we talk about in GDP and economic terms comes later. If the government is able to implement the vaccination drive and the way they are looking at and wanting to do, which they can do much faster by involving healthcare students, healthcare workers across the country, the private sector, the government sector, including the educational institutions, both in medical and non-medical facilities, and even certain other government facilities like the railways.
I get your point. Otherwise,
what I'm trying to put forward is that what they're targeting for the few months, which can be done much faster in terms of getting the vaccination up, we are able to procure the vaccines which we are now looking at.
So that's the point, right? We don't have those vaccines. We have the healthcare infrastructure. We can step it up to. We started talking about how we can manage to do 50 lakh vaccinations a day and how it's going to be fast paced starting April. But that fell flat in 10 days straight, Mr. Aman Agarwal, because we didn't have the vaccines. So it's okay to say we can do 1 crore a day, but unless we get the vaccines, that part is not going to happen. But let's talk about the rest of it and some of the indicators that you've looked at. And yes, and I do want to also talk about government spending and where do they get the money from. But before that, Anil Sasi, the one aspect basis what we've already gone through is the companies who've gone through a tough time, who've somehow managed to survive by, taking more loans, borrowing more money, cutting wherever costs they could have cut to sustain. The second round now, will they be able to survive? They already are so over-leveraged.
No, when you look at the way the companies fended off the the first wave, you have to consider the fact that the bigger companies, the listed companies, the ones whose valuations we see reflected on the bourses do pretty well. And they did it through a number of ways, cost cutting, they've laid off employees because they were uncertain about what was, you can't blame them for that. But at the same time, you have to remember that even as the listed companies did really well, the IIP tanked, the manufacturing part of the GDP slipped, services is down, which obviously means that someone has taken a hit. And that hit has been taken by the smaller guys down the chain, the MSMEs, And the problem is that in terms of leverage, the capacity of the MSMEs to raise a loan, to try and get some sort of a bridge funding to manage the transition of 6 months or 1 year is very, very limited. The bigger companies can do that. So the problem here now is that we are into the second wave without even knowing what the casualty on the MSME side has been. And you have to remember that the second wave is fundamentally different from the first wave. This time around, we have a demand shock. It was a supply shock the last time. It has spread to the rural areas, which means that rural consumption, which helped a lot of bigger FMCG companies do reasonably well in the first wave, they would probably take a hit this time around. Similarly, the pandemic, the first wave, did sort of influence a change in pattern of how consumption played out. For instance, the listed bigger companies would have seen more customers or an increase in customer base purely because a larger number of people were ordering online. But this was all at the cost of the smaller guys.
Correct.
And that might get reflected now quite clearly, and that is really the worry, because at the end of the day, it's one stack that is on top of the other. And the MSMEs are ultimately suppliers to the larger firms. They're also big employers. They might be small employers in terms of the number of people employed, but they're big employers in terms of the scale. And that's where my concern really is in terms of the impact of all of this on the consumption side, which might be very glaringly, evident once this phase, and we're sort of midway through it, so we don't even know how this is going to pan out. So that really is what holds the key, I would say. And also just to add, a few of the things that really kicked in towards the second, third quarter last year, pent up demand in urban areas, all of those things might not really come this time because of the uncertainty. Manrega worked last time because there was no fear in the rural areas. You could get 20, 30 guys together to do to make a canal or a bund or whatever. That might be much more difficult now. And there's scarring all across. Expenses on health are borne out of households. They are out-of-pocket expenses. All that will reflect in consumption.
Yes, the big difference this time, Professor Mehrotra, is the dent on the demand. And a lot of it coming obviously from dent on the sentiment as well. Almost everybody that we know has had a traumatic experience, infections in the family, a loss somewhere in the family as well. Some have gone through worse times, even in rural India. Does that also impact our economic future?
Yes, indeed, it impacts our economic future. However, I want to just emphasize that the first wave and the lockdown, which went on and on, a national lockdown, one of the most stringent lockdowns in the world, a completely unplanned lockdown, actually resulted in much larger job losses. Let's just remind ourselves, that means there was a demand collapse. So it's misleading to say that this time it's demand, last time it was supply. No, it was a supply and a demand shock last time, which is why you got the worst contraction for any economy among the G20 countries last year. The worst contraction. We need to recognize that. And this year, you've only sustained that demand and supply shock. So that's really what the problem is. So you do not expect a revival very quickly. And just because you've got $80 billion worth of FDI, and just because foreign portfolio investors are putting money into India, is not going to revive the economy. In the best case scenario, FDI is 2 to 3% of total investment in the economy. And the total investment in the economy, yesterday's data told us, in FY21 has fallen to its lowest levels in 20 years, which is 27%. 27% of GDP. So don't remind us about FDI and FPI, which are neither here nor there. Right. In any case, a lot of this FDI is coming in to buy out Indian assets, which are going very cheap. So let's just remember these things, because as Sasi rightly pointed out, the listed companies in India are doing rather well.
Yes.
And the listed companies are buying out the smaller companies. So, you know, what we were getting was a K-shaped recovery. And this K-shaped recovery is going to be deepened now because more people are falling below the poverty line, as Mahesh was rightly pointing out. And let's just remind ourselves that this talk about 2 billion doses of the vaccine, and which might prevent the third wave. Well, I want to sort of put some sense of realism into this. The fact of the matter is this supposed number of 2 billion doses comes from supposedly 8 manufacturers, of whom only 2 are actually currently manufacturing. Only 2. And the remainders are either in first or second stage clinical trials, or in last stage of phase 3 clinical trials. And even Novavax, which is to be manufactured by Serum, the approval is pending. So, you know, why is the government trying to fool us into believing that between August and December, we are going to be so rich in vaccines that we will not only supply ourselves, we'll supply the rest of the world, just as we were kidding ourselves between January and March. The fact of the matter is...
Yes, Professor Mehrotra, not just that, the government, when they gave us the 200 crore doses number, few of the ministers even did the math and said that's why we're going to manage to vaccinate almost everybody in the country, because 216 crore doses means 108 crore people can get both of their vaccines by the end of this year. So yes, I do admit that every time this conversation happens, I do try and bring in that word of caution of you know, how we should be treating these numbers. But let me ask this question. On the issue of spending money, how much did we do last time? How much more should we? And here is my question, and you know, Sandeep, maybe you can take it first. The Reserve Bank of India has given a very, very big you know, dividend to the government this time. And that's going to help us through quite a bit. But can they give more, considering that we are sitting on the highest level of reserves that we've seen in decades, maybe?
See, Tanvi, I'm not an economist, but what you gather, see, even international economists like Abhijit Banerjee and everybody says right now is not the time to worry about your deficits. So you can push up the deficit. Similarly, you know, some of the credit issues, especially for the listed and other companies, can be tackled by RBI by you know, restructuring their rules or some kind of accommodation measures. But my worry is, even if you spend, how you're spending the money and the quality of the spending. Because my real concern is, as I mentioned earlier, and as some of my other panelists have also mentioned, is what is happening to the weaker section of the people. So first level is, yes, you must ensure that they have food, they have the basic income, which you can inject money for them to get it on hand. But long term, I think we will have to do qualitatively things has to be different, because the same kind of jobs are not going to come back. You may have to reskill people. You have to get people, just simple doles won't work going forward. You have to create value-added jobs, labor-intensive, but value-added jobs. You have to invest much more in health sector, even in the short term. So those are the kind of spending, the balancing between the short term and the long term would be very critical to manage the inequality, which might arise otherwise. Just now, as everybody was mentioning, we have seen great results coming from some of the listed companies, the big companies, but we really don't know what has happened to a lot of the smaller people who are, you know, we are not really have too much visibility out there. The displacement of labor, contrary to what many people feel, I don't think there has been too much of retrenchment in the bigger setups across. But the real displacement has again happened in the service sector, in the smaller MSMEs and everywhere else, which we are not really seeing in terms of faces or names. They are just numbers today.
Yeah.
So those are the things which we will have to go forward. This is perhaps the first time we have had anywhere in the world this kind of contraction in a peace period.
Yes.
One has seen these sort of things happening, during famine or during wars, but this is in a totally peace period. You're having this, and going forward, I repeat, in my limited understanding, there is no guarantee. You can't predict sitting here how the next fiscal is going to be, what's going to happen there. So we have to, it's like, I think, putting in a very, very layman's language, if you have suffered a massive heart attack, I think it's unrealistic to think that next month you'll start running the marathon again.
Yeah.
So you have to have lifestyle changes. Similarly, we'll have to reset the economy, reset our strategy of how we go forward.
Yes.
Taking into account uncertainties and disruptions those are going to happen.
So let's talk about that segment that you just highlighted, Sandeep. And Professor Aman Agarwal, I bring it to you. Yes, the larger companies managed to cut costs, fire people, save on spending here and there, showed profits in fact, and it looked like, well, they were obviously doing great business because they're generating those kind of profits. But let's talk about the smaller businesses that were given schemes by the central government last time as well to borrow, to continue functioning, to somehow survive, but are now struggling again. Smaller businesses like our neighborhood store. The neighborhood store is either not allowed to open at all or only allowed to open for 3 hours in a day while everybody, tries to buy their daily essential online. That store has been hit hard. The 4 people working in that store has been hit hard. Now, how do we fix that problem?
You're very right, Tanvi. This is a situation which is there in front of us. But this is not something which is not solvable. There are people, the small companies and specifically the small operators are already reallocating themselves. As I was telling you previously, the healthcare sector, which is not vaccination only. Please understand the needs of healthcare sector in this country are much beyond just vaccination or only COVID. COVID is only one component of a small component of the total healthcare requirements of this country. And all those requirements, if we really look at, if we want to service those requirements in this country, the healthcare sector within a span of 1 to 2 months needs an expansion to the tune of 4 to 5 times of its current setup. Now, that is something which will boost up both the pharmaceutical, the allied services and the healthcare framework, which will actually tune up and grow a large number of companies and requirements. Secondly, you talked about the demand. And you see, this is where the small companies come up. You see, large number of people are already moved from big towns to smaller towns or moved to rural areas. Now, they are not going to stop eating. They're not going to stop consuming. They will not change their life patterns for the rest of their lives. Maybe for a month or two they will, but they will have come back to their lifestyles even if they don't move back to the cities. And that's where new businesses will arise, or the reorientation of small businesses will take place, maybe from A category of business to B category, from maybe a manufacturing or a cooking, making restaurant to maybe supply chain systems, maybe helping as subsidiaries of retail segments which are working in. So we are going to see a major shift of some of these sectors which are going to take place. And the small companies can do that. Large companies cannot do that. In fact, large companies are at, this was saying that too big to fail is not a scenario in cases of wars and pandemics. This happens with large companies, and large companies, in fact, have that risk higher because their leverage cost is very high. And if they're not able to manage their leverage cost, they will be eaten away in a very short span of time. Okay. And this is something which is a cause of worry for large companies where lockdowns are eating away. That's why the governments are actually now opening up small by small, sector by sector, like the infrastructure, the construction, or the other manufacturing units. They're trying to open up not the whole thing economy, while the number of lives are getting less infected or less lost. So the government's first priority in healthcare and that sector itself can actually induce job gains plus, and this is something which will be positive, even if the fiscal spending is done in those cases, and there are a large number of, we've almost had about $2 or $4 billion come in the last couple of months in the healthcare from various countries as donations which have come in for building up or structuring some of those healthcares. So that is the kind of reputation India is now enjoying today, not only in terms of foreign direct investment. When I said foreign direct investment meant for a year when all economies did not get a single penny, we were getting that kind of money wanting to people to put into this economy. They still did see hope. They did see the markets being there. They did see people buying and eating food. They would require those services. They did see a new wave of retail framework coming in, or media setups coming in, or education frameworks coming in, or other services coming in. So there is that hope which is being seen by the world. I fail to understand why economists in India can't see this kind of hope which is being generated around the world for India itself. And fortunately for us, we are having people from around the world and within the country who are supporting the government, people of this country, and trying to make their lives at least safe, sound, and to be there tomorrow. As I said again, it is not that 6%, 7%, 8%, 9% GDP which is important. It is important that we are able to take the 1 rupee to the common man at the end of the day, and he's able to get a square meal, as against if we have 20% GDP and we are not able to even service 1/5 or 50% of our population in this country. And this is where it is
Professor
important
Agarwal,
that we need, just one line, Tanvi. We need to keep our fiscals in control. We can't print money and just give it away when we have the reserves in hand. That's why I talked about reserves, that we don't need to go about printing money as of now. And that is not a recourse which vast number of economists, including the former finance minister, has spoken about very strongly, that we just go about printing money. Abhijit saying, who's a Nobel laureate, never served this country. How does he know what India is all about? He may be sitting in Harvard in the United States and look at the economy there. Even there, they're not allowing the inflation to go up. They're not allowing the US dollar to fall down. They have been doing that for the last 10 years.
Well, Professor Agarwal, I don't want you to sit here and let's not sit here and diss any other economist and what their views are. I'm sorry. That is a Pandora's box at all. What do you have to say about Uday Kotak, who said the same thing? Are you going to say the same about Uday Kotak, who was the head of the CII, outgoing president, who in his most last interview has said that if not now, when will we start printing money? That if they, and this is something that the countries across the world have done, whether you use your surplus or you print some more money, there is an open debate. I'm not saying I disagree with your view versus others, but there are multiple views on it. Suffice to say, everybody agrees that a lot more money needs to be spent by the government right now to support the economy. There is no other way out. If you look at the data that's telling us the story just from the first wave, 23 crore more Indians have been pushed below the poverty line. More and more of the smaller businesses have been hurt. It's the smaller industries, it's the local shops that have been hurt. It's the migrant workers who got impacted. Last time there was a higher allocation for Manrega. This time we've not even heard from the central government on that. The central government perhaps seems to assume that the states will take care of it because the states decided to bring in the lockdowns. The states are now taking care of the vaccinations, so the states will also take care of this. But for some reason, nothing is happening on ground. Government intervention into our economy and to support our people, beginning with the welfare schemes and then support for our businesses, should have come yesterday. And it hasn't. And it doesn't matter how many stories you tell us about how many crore vaccines are going to come next month or by the end of this year. That will not help fix the economy right now or even 3 months down the line. Help is needed right now. 2.2 crore people have lost their jobs now in the month of April and May. Where is the plan? Think about it. Thank you so much for joining us on this conversation.